This is Dan Dix here, reporting for Press for Truth, and tensions are escalating in the Middle East as Donald Trump just announced new sanctions on Iran, to which Iran responded by saying diplomacy is officially dead between the two nations forever, adding that the White House was afflicted by, quote, mental retardation. And then Trump just tweeted this an hour ago. Iran's very ignorant and insulting statement put out today only shows that they do not understand reality. Any attack by Iran on anything American will be met with great and overwhelming force. In some areas, overwhelming will mean obliteration. So clearly the war drums are beating louder and louder surrounding Iran. And it seems that people are losing faith in the dollar, losing faith in the United States government in general, and a lot of people are moving their assets into safer havens like gold and crypto. We've seen some huge bull runs in the last few weeks, and one can't help but wonder if this is all correlated and all connected. So joining us on the line right now to help us understand the ebb and flows of these various ecosystems is our friend Lior Gantz of Wealth Research Group. WealthResearchGroup.com is the website. Lior, thanks for joining us today, man. Tensions are brewing in the Middle East at a crazy rate right now. It's needless to say, they're throwing around fighting words right now, and it seems that this has people worried. So I want to get into this current boom in the crypto space and whether or not you think there's a correlation with that. But before we get into that, let's touch a little bit on gold, because it's had some incredible parabolic rises, most we've seen in, I think, the last 6 years. Do you see this as being connected with some of the tensions brewing in the Middle East? And who's buying up all this gold?
Sure. I think the first thing to note is that the price of gold and the price of Bitcoin and the price of any asset class that isn't producing a yield is always going to be connected to what people deem as the intrinsic value compared to assets that do bring a yield. So if bonds are yielding 8% or 9% or 10%, like in the early 80s, there's literally no incentive to own gold. If bonds are yielding 2% and you have inflation at 1.8%, and then the Fed is saying, hey, we're going to cut, then the incentive to buy gold or cryptocurrency is much greater. And so these two asset classes, Bitcoin and gold and silver, land, non-producing land, for example, or art or collectibles, these gyrate as compared to other alternatives. If the stock market is extremely expensive and there's no incentive for companies to keep growing in terms of their valuations, then non-producing assets become more valuable in price. So I think that's what's happening right now, especially with the rate cuts. The likelihood of a rate cut is nearly 100%, just a matter of when and how much. Is it 25 basis point, 50 basis point? And more importantly, will the Fed do what it does historically, Dan? And historically, it takes down the rate cuts in an easing period by 5.5% on average. And if they cut by 5.5% from here, you're starting at 2.25. You're talking about getting the Fed funds rate officially to negative 3%. That's unheard of. So the market is trying to understand where this is all going, and the anticipation for it is priced into the price of gold. It's gone up. I think the last time I was here, I was telling you, look, my target is about 1704 for the end of the bull market, and it's gone up by about 16 or 17%. And so it's been remarkable. Cryptocurrencies have been a godsend. I mean, it's adding commas to the bank account, right? It's insane. So in 2017, when Wealth Research Group started talking about cryptocurrencies, Bitcoin was 500, Ethereum was $12. We were the first the first free newsletter to cover it. Monero was like 19. I talked with the Dash people and the founder of Litecoin, Charlie Lee, when that thing was $25 and Dash was $30. But the volumes were not there. So even if you got in for like what, $500 to $1,000 or whatever. Now in 2019, if you cut the bottom and in January, you can build any sort of position. You can get in at tens of thousands of dollars and made insane returns. So I think very correlated to the rate cuts with gold also with Bitcoin. I think the other altcoins are just enjoying the derivative volume that goes into Bitcoin mostly. Secondly, with gold, the dollar right now is just sitting on that support level for it. It's at a 3-month low. If it breaks down another point on the DXY, it's going to a 6-month low, and that's going to be a bear market. A bear market in the dollar is the biggest event of the year. There's nothing that can come close. After 8 years of a bull market, between 2011 and 2019, with 2018 being the year that the dollar was the best performing asset in the world. That hasn't happened since 1969, 2 years before the biggest devaluation. And so what we're thinking is that what Nixon did was basically he pressured the Fed to lower rates in the early 70s. He was afraid of a recession. He was afraid of high unemployment. They didn't want to do it, so he decoupled it from gold. Trump doesn't have that ability, so what he's trying to do is trying to make sure that the Fed pushes rates down as much as possible. If the dollar goes into a bear market, then it's not just gold, it's all of commodities that are going to be participating. So that's the big thing to think about. And then obviously, a lot of correlation within the price of gold and the price of oil. So if the dollar goes down and oil prices go up, the price of oil dictates a lot of what happens for the price of gold, because it takes so much energy to mine gold. And then thirdly, and the last thing, Dan, if you're asking for a correlation, so we have interest rates in the dollar, and then we have the price of oil. The last thing that really affects the gold price is central bank buying and jewelry buying. So in China and India, jewelry buying right now is really solid. And that takes about 40 to 50% of the global supply of gold. Central bank buying is about 10%, and they're buying like you're reading this stuff from Russia. I mean, they basically just own gold now. They don't own any dollars, and so that's what's really helping the price of gold to fly off the charts. For Bitcoin, I think a lot of people are worried about capital controls, about getting their money stuck in a particular country. And then you have obviously all the buzz regarding the Libra from Facebook that is really helping it. So I think cash alternatives are really enjoying all of this. And then that final piece with Iran, I have family in Israel, and the Iran situation has been going on for years, literally years. And it usually starts to pick up whenever there's either a big campaign, like a political campaign. They're trying to ruin somebody's ability to get reelected. So in Israel right now, there was an election. The way the system works there, you need to form a coalition. The elected one, Mr. Netanyahu, did not was not able to do that. So there's like a re-election and all that kind of stuff. So they're trying to put a lot of pressure on Israel, and obviously Trump is going to start campaigning real soon. And the economy is going really well for him, and that's the ticket he's running on. So they're trying to create some friction for him, and we'll see what happens. In the end, Iran is not it's not a threat to the United States. It's a threat to the world's oil supply through that strait, the Hormuz Strait. If you look at the map, about 60% of the, if I'm not mistaken, around 60% of the world's oil goes through that little strait. There's problems there. We've seen it in 2008 and before. I mean, it's a very toxic area in terms of its political, volatility.
Well, are there any other kind of telltale signs that would point to us to suggest that there is going to be a rapid decrease in the dollar, like the gold-silver ratio, for example, or are there any other things we can be looking to say, hey, this is why gold and crypto like Bitcoin is a good idea right now?
Sure. So 3 things. One, the average dollar bull market is about 7 years. And it's 8 years into this one. So one thing is historical precedents tells us that the dollar is due for a bear market. If you go to wealthresearchgroup.com/dead, like DEAD, and /Fed, Both of these reports talk about the dollar cycles and how the Fed is managing dollar cycles against the average person. I think those are must reads. And with regards to that, look, the dollar has just had an 8-year period where it was considered the least ugliest duck of all the fiat currencies. And it's not enjoying that anymore. The euro is starting to become more favorable for a lot of countries because they fear either sanctions, tariffs, or otherwise from the U.S. In Europe, if you're a sovereign wealth fund or a central bank, it's much clearer what the ECB is doing, and what they have no people like Trump who are just very aggressive with their ideas, and they can flip from one day to the next. So buying euros seems to a lot of sovereign wealth funds like a good idea. It's obviously either the dollar, the euro, the yen. So the yen is obviously not a good choice for anybody. So that's one thing. The euro is starting to break out compared to the dollar, and whenever that happens, the dollar suffers a lot of problems. And then what's happening in the U.S. right now? So you have PMI contracting. So PMI, if you look at that, that's the Purchasers Manager Index and Manufacturing Index. And if you look at that, going below 50, it's contracting. Contracting means recession. Recession means a bear market for the dollar. So that's one thing. The second thing that you're seeing with regards to that is that companies are telling you, hey, our cost labor is nearing the peak of what we can pay employees without it cutting into our bottom lines. So we can't hire anymore that much. In fact, if there's any slowdown, the one thing we'll need to do is lay off people. Now, I know the official unemployment rate is about 3.8%, but if that's the way they measure it, it only counts for the last 30 days of people applying for unemployment. So there's a shadow of about probably double that of people that have just given up but they want to work. And then you have a lot of people that have gigs or like part-time jobs, and they include them. It's all kinds of stuff. So there's probably about 25 million people that are looking for work in the U.S. right now. And if you add more people into that, you're putting a lot of pressure on the government because tax receipts go down. You already have a $1 trillion deficit. So in a recession, it's projected to reach around 1.5, 1.8 trillion a year. Just so we're on the same page, if you have to raise an additional $800 billion in bonds, you can't do that from legitimate buyers. The Fed will come in and monetize that. So the Fed will have to print currency, do QE. All of that is playing into the dollar, very much playing into the dollar weakness. And where you saw the Fed always saying, hey, the economy's getting better, that's not what they're saying right now. They're saying there's headwinds and they're monitoring it and that they need to cut rates. This is all playing into dollar weakness. So look at the dollar index. It's the DXY. When it goes down below 92, it loses all support and it can start going down to around 87, 86 and getting into real problems. And in real life, Dan, what it means is that your wages are probably not going to increase. Stocks are probably going to be stagnant. Commodities are probably going to be much higher. And so everyday items will be higher. And this is real inflation, probably on the official level, 2.5% to 3%. Mm-hmm. On the shadow level, which more people follow right now, it's going to be probably like 5 or 6% a year. So that's in 4 years, you lose about 20% of your savings if you're in dollars and not in gold, for example, or in silver, etc.
Well,
that's a lot of money.
Yeah, it's not looking good then in that case. I mean, you couple that with what's going on in the Middle East, you couple that with the trade war between China and the U.S. and the rising, inflation. Things are bubbling up, brewing, getting a lot worse. The boiling frog, as we call it. So let's shift into some solution-orientated discussions here.
Okay.
People are watching this happen. They're rightly so concerned. What's the next move? I mean, for people who are like, guys, you're right. Things are getting crazy. Things are brewing in the Middle East. Things are happening in America. It's all
Sure.
coming down. Dollar's going to crash soon. How do I go about doing this? You know, what are the ways to go ahead and start protecting my assets? What would you suggest is the best way to go moving forward, especially now as tensions are escalating?
Well, obviously, I can only talk for myself in terms of what I'm doing personally, as I'm 35 next week, and working entrepreneur, investor. So I can tell you what I do as all of these hats. But I also wrote a report of what you do if you're a retiree or if you're in your 50s or 60s. It all depends. If you go to wealthresearchgroup.com/top TOP, or go to our website and click on the special reports menu at the top, you'll see a number of PDF reports that you can download that talk about this. The one thing that is most important, Dan, is for people to understand that we live in a have-not society. And I've talked about this in many interviews that I've been on. The haves are about 10 to 20% of the population. So in America, we're talking about 30 to 60 million people, and they're well off. So their wages are fine. They're saving. They're putting money into either real estate or the stock market, and they're double, triple dipping because they not only are their wages going up because they're at HQ of a big company or they're doing well because they have a small business and it's thriving, etc. And then they're putting their savings into the stock market, so they're making money twice. And if they're doing something besides that, then they're making money 3 times, right? Because with the fact that entrepreneurs in the States have better tax brackets and a lot of ways to get the optimal tax rates, they're triple dipping. On the flip side, you have 80 to 90% of the people who've seen their wages go down in the past 20 to 30 years. They're seeing their work or their career, their profession being either displaced by automation or by outsourcing. So they're also in fear of getting laid off, and then they don't have any assets. So they're not growing in equity, and they hardly have any savings. So you have a have and have not economy. In that type of environment, you need to first of all figure out where you are on that pendulum. If you have savings and if you have money, you really need to study how to diversify it. That's more important for the average person than anything else. That's more important than picking the right stock or doing anything else. If you have the right diversification model between various asset classes, you will beat inflation if you don't try to time the market. So you will grow your wealth in that regard. And obviously, you need to think about your career first. For the have-nots that are 80 to 90% of the people, this is the majority of people. For them, there's 3 things that they must understand. One, they can move from the have-nots to the haves real quick. And the way that they do that is by approaching and networking with people on the have side. People on the have side are full of cash, and they're ready to put that cash to work. So if you have good ideas, if you have good startup ideas, good business ideas, if you know how to network and you're confident and you know what you're doing and you have a plan, you need to find a way to network. I've been pitched by every Uber driver that I've ever been sitting on the back seat of. When you tell them, hey, I'm an entrepreneur or something like that, or an investor, which I do obviously on purpose, you listen to what they have to say. And if they have opportunities, then that's a way for them to move from driving a car for 4 or 5 hours a day to being a CEO of a little startup company, or if you have a different idea. So that's one thing. The cash is not gone, right? It's just concentrated with one group of people, but you can tap into that group of people by networking and by being in the right place. Either you can service them by moving to their neighborhoods. I've seen so many people that have started as assistants to wealthy individuals and graduated into they learn everything that they know because they're under them, right? And so you get like a free mentor. You even get paid to be mentored, right? Because he pays you a salary for being an assistant. So that's an important facet. The second thing is you have to focus on professions and careers that are not in a real bind where they can get outsourced. The number one job in 60% of the U.S., so in 30 states, Dan, is trucking. You're talking about 1.7 million people that know how to drive. And so when autonomous cars, driverless cars, all of that is coming in, that's going to be a lot of trouble for many people. Teachers, they're going to get replaced by online courses, etc. You really need to figure out if your profession where you're going to spend the majority of your day and the majority of your life at, is that in a real situation where it can get outsourced or automated or not? What are you doing? What are your skills that are always going to be needed? So think about that. That is the second thing that you need to really consider. First of all is your active income. Secondly is your career. And then you need to think about investments. Now, when you think about investments and you don't have a lot of money to put in, you need to think leverage, which is other people's money. You need to educate yourself and get to a point where you can convince other people that you will split profits with them. They have the money, you have the time and the education, and you create win-win situations that way. I started that way when I was 16. I read a ton of books. I read about 2-3 books a week on investments. Started with Warren Buffett, Peter Lynch, and graduated into like 100 books in the first year. And then at age 17, started pitching people in my neighborhood, the grown-ups, about splitting profits, because I obviously had a little bit of babysitting money and delivering pieces, but not big chunks. And obviously, with my father being bankrupt at the age of 13, when I was 13, I couldn't tap into anything that was family owned. So, I knew that whatever is here is what's gonna help me to move ahead. So I think that is something that people need to understand. The money has gone into a very concentrated area. And then the last thing, and that is basically the fourth solution. So one is networking and pitching, like a Shark Tank. You see the show Shark Tank? Mm-hmm. That is the basically what's going on in this economy. There are people that have a lot of money, and there are countless people that come up with ideas, and that's a great way to progress. Maybe you won't get your idea, funded, but you'll definitely gain in confidence, and maybe you can help that person first as an employee. Secondly is to educate yourself and try to leverage other people's money. Third is to make sure that you're in a very much in a profession that doesn't get in serious risk of getting outsourced in the next 2, 3, 4, 5 years. So you're building something that's worthwhile and won't get taken from you. And the fourth thing is consider having a secondary income in a home-based business. You can start with very low startup capital. You can start with a mic, you probably started with a mic and a laptop, right? And start reaching people and then monetizing your business model. But I think home-based businesses are a treasure of the 21st century, and you can really start to look at how you can do that. It starts with answering surveys. You can answer surveys and get another $200 a month. And there are many easy ways of just getting by with home-based businesses, but obviously there are people that are building multi-million-dollar stores on Amazon, starting from nothing. So the sky's the limit, but just consider that as part of your plan B here.
Well, fantastic advice. This is obviously coming from a self-made man, somebody who's done these things himself. So you're speaking directly from experience. So I think that's really good because, like you said, it depends on where you are in the pendulum. You're going to have a different strategy moving forward, and I think you've outlined some really good solutions here. So I want to suggest people check that out at wealthresearchgroup.com/top. What are any of the other links that you think they should be checking out besides that one?
So if you've heard about the financial reset or are concerned about how the fiat monetary system could blow up, you can go to wealthresearchgroup.com/reset. And I also, obviously, with everything that's going on, I don't know if you've seen this, Dan, but in our newsletter yesterday and today, so Monday, Tuesday, we covered a company that has gone up by 68% in the last 2 days, and it's a gold company. So these gold companies right now, with gold moving up, they're becoming they're on fire. So, but to know what you're doing in the gold space, it's a science and an art. If you go to wealthresearchgroup.com/gold playbook, that's the most extensive gold investment guide online. There's literally nothing that I've seen or encountered that is as detailed as that one. So I think that is critical for people who are looking into that. And then obviously in the newsletter, we keep on covering new altcoin opportunities and what's going on in Bitcoin. And the newsletter is always going to be the best way to get into the highest priority ideas and the top ranked ideas. And I'm only sharing what I'm doing myself. So that's part of what the newsletter is all about for the past three and a half years.
Awesome. Well, for that reason, I want to encourage people to definitely check it out because, like I said, you're coming from a place of experience, and that's important moving forward. You've done the due diligence. You've done the work. So and now you're offering links. So folks, I really encourage you to check them out. Links will be located in the description below. Once again, Lior, thanks for helping us break this down and to understand this one today.
Thank you, sir.
We all want truth. The truth will set you free.